as a small home-based business owner. Now I mentioned small slash home-based business because any business under like 50 employees, the SBO, Small Business Administration, considers to be a small business. But some of those are based in your home, some are not, and we'll talk about the distinction there. But you get the maximum benefits uh, if your small business can qualify as a home-based business, and we'll talk about that. So here's some of the expenses. It allows you to write off some expenses that otherwise would not be deductible. There's some things you can't deduct on your tax return, especially since about 70% fewer people are now filing a Schedule A. Itemizing your tax deductions. That's because there's such a vast increase in the amount of the standard deduction. So this gives you a different way to be able to write off a lot of expenses that otherwise you wouldn't be able to write off. So it means you can reduce your expenses by like 30%. You can legally reduce your overall tax burden as well, because in fact, if you run a home-based business and you lose money in some particular year, you can even apply those losses in most cases against your W-2 income or other sources of income. But overall, it's going to reduce your tax burden for you and your family. It may even decrease your chances of an audit, depending upon circumstances. But it's quite often that the IRS will start with a letter audit. They'll send you a letter and ask you a question, and they want you to send back the answer with evidence of whatever it is they're asking. And then if they're satisfied with that, then they'll probably check you off the list, take you off the list for future audits. That's no guarantee, but it's happened for a lot of people. That's a nice thing to think about, because audits are not a nice thing to think about. They just chew up a lot of your time. Usually, they don't end up resulting in you owing any more money. Sometimes they do, but either way, it's going to chew up your time, and you never can get that back. Sometimes it can increase your take-home pay from your W-2 job. Because if you're going to be transferring some of your expenses to classifying some of your expenses as tax deductible business expenses, then that's going to take it's going to take less. You're going to be paying a lesser amount of payroll taxes, because your take-home pay will be higher because you're paying less in taxes because of your business deductions. And then finally, tax savings can help pay for your GS partner's business expenses. Pay for it. In fact, overall, this is a broad brush average, not statistical, but usually qualifying for a smaller home-based business for people. And I've been doing this for 21 years now. I've coached tens of thousands of people on doing this correctly. They can put an additional $5,000 plus or minus in your pocket every year, and that begins this year. Actually, in your case, it begins last year, because we can make some of those deductions retroactive. So this is a big deal. Those are some of the benefits of qualifying as a smaller home-based business. The benefits, as I said, put an additional $5,000 or more in your pocket every year. That's usually in the first year. After that, you usually will save even more, because you get to realize some tax deductions that you didn't know about in the beginning. I don't teach everything right off the bat because it would be overwhelming. I teach the 6 biggest tax deductions for small business owners. That's really all I focus on in my primary book. And then I go into some of the other ones in special reports and executive summaries. But what kinds of deductions can you get? Well, those deductions can be substantial, but take a look at it, because they're all expenses you're probably paying for out of after-tax dollars right now. These are the top 6, but in no particular order. Business use of your home, that's a really big one. If you have a portion of your home, or portions, it can be more than one, of your home that is being used for exclusively and regularly for business purposes, then you qualify for a home office. Now, don't take the word office like literally, because that's been broadened now. It's you can take a half of a closet and store your business promotion supplies and equipment stuff in that half a closet, and write out that square footage. So it's very broad. But the 2 requirements are it has to be regularly used areas, which means you can't just set up something to look like an office and take a picture of it and then go back to using it as the bedroom. You've got to use it on a regular basis. That's usually tax courts have defined that as they'd like to see at least a couple of times a month. More is preferred. There's no defined minimum on that, but this can be a massive deduction because of what it gives you is the ability to take. Let's say after you set up your home office or areas, you have let's say 15% of your entire square footage is for business use. If that's the case, then 15%, this now becomes deductible, these expenses. You now can write off as a tax deductible expense on your business 15% of your rent or mortgage, 15% of your upkeep expenses, homeowners insurance, renters insurance, replacement and repair of appliances, all kinds of overhead home-based home expenses that you're currently paying for, and after-tax dollars can become tax deductible, partially tax deductible. 15%. 15% of what? That's a very large amount when you add all that stuff up: gas, utilities, everything. All of those overhead expenses that you're paying for right now out of your after you out of your take-home pay. A portion of that can be paid for with before tax income because it becomes tax deductible to your business. This is huge. This can save people thousands of dollars a year, and sometimes by doing nothing different, just reporting what they're already doing. Another is a big one is business use of your personal vehicles. This chapter in my book is entitled "The Key to One of Your Biggest Deductions Might Be in Your Ignition." Because you're using your vehicle anyway for business, right? So if you understand what the rules are and follow the rules, you can usually get a sizable tax deduction for using your vehicles for business purposes. In fact, it works out to be somewhere around, I think it's about 56 cents a mile right now. So every time you drive 2 miles, you got more than $1 for the tax deductions. And those there's a whole chapter on this in the book about how to make this work the best for you. But you also get significant depreciation on your vehicles. You get tax benefits whether you are renting or whether you're whether you own or buying a car or you're leasing one. These are very, very large expenses that can cover your not just the vehicle itself, but your license and insurance and documentation fees, like registration. All that stuff can be the business use portion of your vehicles can apply to that. So if let's say you use let's say you drive your vehicle 10,000 miles a year. You probably didn't last year, but we may this year. Now things are getting a little bit freer. If you put 10,000 miles on your car and half of them are business miles, then you got 5,000 business miles of business deductions. That's going to give you pretty close to $3,000 in tax deductions. Now, $3,000 tax deduction is equivalent to about $1,000 in tax refund. But there's roughly a 3-to-1 ratio there. So you just put an extra $1,000 in your pocket by doing nothing different except keeping some real simple records. And by the way, here's how simple the records are. They want to know for your business use of your vehicle, what day is it, where are you going, why are you going there, and how many miles you're driving. That's it. So I give you a little vehicle mileage log that I'll give to you as part of this presentation that has all that filled out. All you got to do is scribble in the numbers. Now, how long would it take to write down today's date, where you're going, why you're going there, and how far you're driving? Probably not very long, maybe 10 seconds if you're slow. So it's real easy to do record keeping for this. And this can be reconstructed retroactive, and I'll show you how to do that. Business travel is an important deduction because when you understand the rules, which I will teach you if you like, then you can construct or set up almost any trip in advance to be a business trip, including family vacations. Got to be set up in advance. It's got to be set up in a certain way. But I show you how to do that. So if you want to take the kids to Disneyland, as we talked about before, then you can say, okay, I want to take the kids to Disneyland for a vacation, but I want to make it largely tax deductible. How can I set it up as a business trip? And there are ways to set up the business trip that can give you where the vast majority of your expenses will be deductible, and yet you won't have to spend hardly any of your time in business. Can this be huge? Business media, by the way, let me go back to business travel. Cruises are generally not tax deductible. And most of the network marketing companies that tell you that your cruiser tax deductible are flat out wrong. The IRS refers to cruises as luxury water transportation. So if there are ways of classifying the cruise as deductible, but it's not by having seminars on board. So the thing they normally do is chew up half of your time on board with business meetings and say, okay, now you get a tax deduction. No, you don't. That didn't help your tax deduction. I'm going to tell you what the truth is. I'm going to cite the tax code. I'm going to give you the real tax code, then I'm going to give you the plain English translation of it. Business meals, for a while those were out. For 2020, those were out for the most part. They're now back in 2021. You can not only deduct business meals, but deduct them at 100%. They used to be 50% deductible as entertainment. It used to be meals and entertainment. But with the Tax Cuts and Jobs Act of 2018, your entertainment deductions were disallowed. That's part of why they gave you a much larger standard deduction. Well, that's back again now. If you have a legitimate meeting with someone, business meeting with someone, and it happens to occur at a hotel where there's food served, food and beverage, and you pick up the tab, then you are able to deduct the full cost of that meal and other expenses related to it. This one, I don't know why I put that down as the fifth one, but this is probably the largest deduction for most small business owners, especially home-based business owners. There's only one category of taxpayer that can qualify to write off all health expenses for all family members. Now, most people get to write off your share of the insurance premium. You may share that with a W-2 employer, and you get to write off your portion of it. If you're totally self-employed and you pay all the premiums, you may be able to get, in most cases, you can write off all your premiums. But that's just the beginning. Your premiums that's the amount you pay every month to the insurance company to have the right to get some of your money back under some circumstances. What about your annual deductible? That number that starts over every January 1st says you've got to pay the first, it may be $3, $4, $5, $6,000 out of your own pocket, after taxes, by the way, before you even begin to qualify for any insurance coverage. Now, with the small home-based business with no employees or one employee only, you can write off all of your health expenses, and that can be expanded to include all direct members of your family. That's all dependents. That'd be you, your spouse, and any kids that are under the age of 18. This is huge. The average person I work with that claims this deduction is getting back like a refund of somewhere around $5,000. That means they're getting probably $7,500 in tax deductions. So this is mammoth, and you're the only category of taxpayer that can qualify for it. You've got to have no employees or one employee. Any above that, there are plans for people who have a few employees, but the real generous one is this one that has only one employee. And finally, hiring your kids tax-free to work in your small business. This one's one of my favorite ones because it, like everybody else in wealth builders, we like helping people become more tax smart, more financially powerful, and information is what gives you that power. Well, most kids don't get, you probably didn't get when you were growing up, any education about much education about finances. When I went to school, actually my daughter went to school. It's a better example because it's more recent. When she went to school, they didn't even teach them how to balance a checkbook. They didn't teach you how to do a simple tax return, the simple 1040 period. They didn't teach you how saving money and where you save it in ways that produce compound income can rack up large savings for you, a large savings nest egg. They don't teach all that stuff. But here's some. I have an hour-long presentation I do on this subject, so I won't give you the whole hour. I'll give you 3 more minutes. And that is, as long as your kids are under the age of 17 and over the age of 6, they can qualify. And this is cleared through all the courts. The tax court says the money you pay your kids to work in your business is tax deductible to you as wages, and the income tax laws say that the money earned by your kids under the age of 17 or under the age of 18 is tax deductible up to the amount of the standard deduction, which this year is somewhere around like $24,000, I think it is, for a family for joint coverage. Uh, so you hire your kids, and you get pay them with tax. Uh, the money you pay them is tax free because you can deduct it. The money they earn is tax free because they earn as long as they earn under the amount equal to the standard deduction, it's free to them. So they're earning money, and you got to pay them the way most businesses do. How do most businesses pay their employees? With a check, right? They don't come around on payday in your office and hand out pizzas. They don't come around and count out $100 bills and pay you in cash. You pay with a check. So you want your business to look like a business. If you're going to hire your kids, pay them with a check. Have a business employment agreement, which I'll give you a draft of. Have an employment agreement with them that specifies what they're going to do and how they're going to be paid, et cetera, et cetera, et cetera. And then pay them with a check. Now, what's your 7-year-old or your 10-year-old going to do with a check? Nothing on their own, because in most places they can't open a financial instrument. I think that you guys call it, Doc. They can't open a checking account, a savings account, money market account, any that kind of stuff under the age of 18 in most states. But they can open a custodial account. So you open the account. You're the custodian. It's their account, you're the custodian. So although it's technically their account, they can't touch it until they're 18. So you control it. This is great because when if your kids earn $100 and you put that, first of all, you take them to the bank and you take them inside the bank and you show them how to fill out a deposit slip, how to endorse the back of the check. Go ahead and let them write their name on the back of the check too. It doesn't make it. It's